Hello guys, welcome to another video. In this video I'm going to be showing you how you can trade using fair value gap. Fair value gap is one of the major institutional reference points of the ICT. I have tested it severally on different currency pairs and I realized that it worked better on gold. And so far I've actually made a lot of money using this strategy in trading gold. But first and foremost, in this video I'm going to be showing you three things. Firstly, what is fair value gap? And secondly, how to identify fair value gap, and thirdly, how to trade fair value gap on a gold. Firstly, what is fair value gap? Fair value gap is just a price differences between the supply and the demand. I hope you get that right. Now there are two types of fair value gap. We have the bullish fair value gap and the bearish fair value gap. Now as you can see right here, difference between the closing of this candlestick and the opening of this candlestick is what we call a fair value gap. You're going to understand it better when we get into the chart. And the bearish fair value gap is just the reverse the case of the bullish fair value gap. This is the opening of the candlestick and this is the closing of the candlestick. So right here, the difference between those two is what we call fair value gap. So the market is expected to come back and fill this particular space in the market before moving towards a particular direction. I hope you're getting what I'm trying to say, right? So the next thing is how we should be able to identify fair value gap in our chart. Now before you can identify fair value gap in the chart, there are two things you need to put into consideration. Firstly, there must be a direction in the market. It's either the market is going on an uptrend or a downtrend. And secondly, there must be a three candles where the second candle shows a difference in price between the first candle and the second candle. Now let's take for example right here in our chart. This is the first candle right here because we're actually in a bearish move. This is the first candle right here. This is the second candle and this is the third candle. And what thing I really want you to note is that either of those candles can have different color. It's either it could be green or red depending on whatsoever it is. As far as there is a gap between the first candle and the second candle, then you've actually identified the fair value gap. I hope you're getting it right. Now let's actually look for more. As you can also see right here, you can see the price differences between this and this. You can see the price difference right there. So aside from that, again, we can still see more and more right here. You can still see this. You can see right here. And we can, in fact, we can be able to see a lot, especially on gold, because it works very, very well on gold. You can see this right here. Now, situation may warrant whereby you will not be able to actually identify it. Now, to help you to identify fair value gap very easily, what you have to do is to just come over to your indicator and actually type in fair value gap by Lux Algo. So when you click on it, what will happen is that the indicator is definitely going to go into your chart and help you identify the fair value gap. As you can see right here, you can see the fair value gap was actually marked out right here, also marked out right here and right here. You can actually see there's actually a price difference between this candle and this candle. Let me zoom it in so you can be able to see what I'm trying to say. There's a price differences between this candle and this particular candle, which is the differences in the market, right? So you can see that the market actually came back to fill this particular market before it starts going up. Let's find more in the market. You can see right here the differences right here, and you can see that in the future the price came right here to retest this particular level before it starts going through a particular direction. This is how you can be able to identify a fair value gap in the market. Now that takes us to the next agenda, which is how to trade fair value gap in the market. As at this particular point, I believe you know what a fair value gap is and how to identify it in the market. Situation whereby there is a fair value gap in the market, how you should be able to trade it effectively. First and foremost, you must be able to identify the trend. and as you can see, this is actually an uptrend going up. So what you're going to do, as soon as you identify a fair value gap right here, you wait for the market to retrace back to that level, or to come back and fill the fair value gap or the price differences in the market before you enter a trade. Let's wait and see the market to come back to retrace to this particular level. And as you can see right here, the price came back and retraced to this particular major fair value gap right here. Immediately you see that the market comes back to refill this particular gap. What you just have to do as a trader is for you to take your long position too, because the market is going on an uptrend. So you're going to take a long position too. You're going to enter the trade right here, put your stop loss right at this particular level, this particular support level. Now we're going to take it up. Let it be above the higher high in the market. So let's see how the trade turns out to be. As you can see right here, just as a spike, it went up towards to hit our take profit. So fair value gap is very, very important, and it is very, very powerful whenever you see them in the market. This is one of the institutional reference points taught by the ICT, and it is so working well. So for you to know it's going to work well, let's actually go into the chart and see where the fair value gap happens and what really happens, or what has been the reaction when the market comes back to fill that part. Right here we found a bearish fair value gap. The first fair value gap is this, and you can see the market actually came back to retrace onto this particular level. Now the next fair value gap is actually this. What we have to do before we trade this fair value gap is we want the price to come back to either touch this level or trade on this particular price in order to fill in this gap in the market. So guys, let's see how the market actually turns out to be. As you can see right here, the market did not only touch this particular level, it also traded on this particular fair value gap in order to fill in the price. So when you just say this particular move in the market, what you just have to do is to ensure you allow the market to break out from this particular fair value gap before you enter the trade. So guys, let's see how the market goes. You can see right here, the market has actually traded out of this particular fair value gap. So what you're just going to do right here as a trader is for you to take your short position too. So you can actually enter the trade right at this particular level. Then you put your stop loss right here, because the trade might actually come back to kind of retest it the second time, so you won't be a victim. The take profit should be above the next lower low if it is actually a bearish move, and a next higher high if it is a bullish move. So right here we're going to put it above this level, and let's see how the trade is definitely going to turn out to be. So right here you could see we've actually smashed in our take profit, but I want you to actually observe something. First and foremost, you can see a fair value gap between this candle and this particular candle right here, and you can see the market also traced back and retraced back to this particular level to fill in this gap before it keeps moving. This is one thing you should be able to note while trading fair value gap. And another thing I really want you to note is that there are some fair value gaps that are not very important in the market, especially when the sizes and the differences are not much. So in a trade where the differences are not much, the high probability of a market coming to refill that particular level is very low. Now you can see this particular area right here. The market couldn't come back to retest it because the price gap is not very much. So guys, one of the don't you should know while trading a fair value gap, especially with gold, is that before you trade a fair value gap, ensure the price differences between the fair value gaps is very much, that the market cannot just overlook. Rather, the market must just come back to fill that particular direction and fill that particular price before moving towards direction. Whenever you have a very shallow fair value gap, do not trade it. Rather, before you could even trade it, allow the market to retest it. And if the market did not come back and retest that level, just let that be. I hope you're getting it right. So if you really understand this video and you think you learn one or two in this video, do ensure you give a like, subscribe to this channel, share this video to anyone or your trader friend that you think may actually need it, and comment any of your views on the comment section. I will definitely reply to your messages. So guys, till I see you in another video, keep practicing and bye for now.